Good morning, viewers. Welcome to yet another edition of the Commodities Complex as it appears on Thursday, September 4th, 2013 at 7:45 a.m. Here I give a roundup of the complete Commodities Complex as it closed last night as things are shaping up this morning. Two important factors which directed the course of the market of the Indian MCX was the weakening INR and the crash in the equities. Equities crashed to a low after the Syrian crisis hit the market and rumors were agog in the market of US forces striking Syria. This impacted the INR badly, and there was a sharp slump in the INR and it hit the psychological low of 68, although it closed a little below 68 at 67.3. In the international markets, upbeat China, US and Europe data held up the markets on a high, but markets are still weighing in and discounting the possibilities of the US striking Syria in the days to come. The US Congress meets on September 9th on Monday to take a final decision on this matter. Of course, a week later, around the 16th and 17th of September, we have the FOMC meet in the US, which will take a final decision on the tapering of the QE3 or the stimulus package. Markets have already discounted that some kind of a tapering down is likely to happen, and whether it's going to happen in a gradual phased manner over a period of time and whether it will begin immediately from October onwards remains to be seen. This will have a major impact in the markets in the weeks to come. Now we talk about the individual commodities. Gold is now trading at around the $14-13. It rose above the psychological resistance level of $1,400 in trades midday yesterday, even as the Syrian crisis hits the market. Hit a low of 1384 yesterday morning, a high of 1414, now trading at the same levels. Important resistance levels are 1418, 22 and $28. Supports are $1,400 and $1,384. On the MCX exchange closed well above the 34,000 mark at 34,400, likely to test resistances of 34,700 and 34,950 mark, just around the psychological resistance levels of 35,000. Current support is seen at 33,800. Of course, you need to take a call on the INR, as a weakening INR is going to push up bullions to that extent more. Silver is now trading at around the $24.15 mark. It hit a high of 24.38 yesterday, strong resistance at 24.5 and support below $24 at 23.8. On the MCX exchange, the faraway contract is now closing at around the 59,000 mark. It's likely to test up to 59,500 and 60,000 based on a weak INR, and support is below 58,100 as of now. Bullions are helped in a major way by the weakening INR, and any further weakness up to 69, which is likely to come as per market talk and the technical charts, could see further rising of bullions. Crude continues to escalate on the Syrian crisis, and we saw a sharp increase on the MCX after the weakening INR, and it closed at around the high of 7,500 mark at 74.93, hit a high of around the 75.10 mark. Now psychological resistances could be tested at 75.50 and 7600. Even a positional target of 7700 cannot be ruled out in the days to come if the fears of the Syrian crisis continues in the market. Support is now seen at 73.80 mark. On the COMEX, it's now trading above the $108 marks. The resistance are at 108.80 and 109. A close above $109 could take it to new highs of around the 112 to 114 mark. Strong weekly support or positional support is now seen at $105.50. Natural gas, as we've been telling, continues to remain positive. A psychological resistance now at the life high of 255, close at around the 253 mark, likely to test a close above 255 up to 258, 263, with positional support below 243. On the COMEX also, it trades well above the psychological resistance of $3.5 as of now at around the $3.6 mark. A weakening INR is likely to help both the crude and the natural gas prices on the MCX exchange. Base metals have looked up yesterday on upbeat China, Europe and American data which came out even till late yesterday evening. Copper hit the high of around the 510 mark. Current strong support on a weekly basis is below 502, likely to test 512, 515 in the days to come. A close above 550 could see further upside rallies in the commodity. Buy on dips is recommended as of now. Nickel tested around the 948, 949 mark. Strong resistance is at 950, above which 960 could be tested. Support is now seen at around the 930 mark. Lead remains positive along with copper among all the base metals and inching closer to the 149 to 150 mark. So weekly positional resistance is above the 154 mark. A close above 154 would take it to much higher levels of 158 to 162 levels. Strong support is now seen at around the 145 mark. Weekly positional supports are at 143. Zinc again trades around the 130 mark, likely to test 132, 134 in the days to come with strong support at 125. Aluminum likely to test the resistance of 124.50. Support is now seen at 122.50 mark. Overall, all commodities whether it be base metals, bullions or energy are looking up based on the weak INR, as also in the international bourses, the dollar prices are holding at current levels, pending outcome of the Fed as also the Syrian crisis. We hope to give further updates and photo shoots during the course of the day by the afternoon, which will be uploaded on our website www.akshayaship.com. For further mailing enquiries, please direct your enquiries to Lotus Advisory Services at yahoo.in. Have a profitable trading day. Thank you.